Well, good evening, all. Ira Epstein, and here we are with your financial market update. And this update is for the evening of Tuesday, the 28th of November, 2023. The time, 6:50 p.m. Central Time. You'll hear a lot of talk and see on TV. They'll be talking about Charlie Munger, Warren Buffett's right hand for many, many, many years. 99 years old, passed away today. They'll say a lot of good things about him. Wish you the best, Charlie. All right, in the marketplace, tomorrow we're going to get the Fed Beige book. We have CPI numbers coming up. We then have the Fed chair speaking on Friday in some form. I'm sure it'll be all over the news. And then we come to the end of the month and we start getting into the jobs data again, and we start talking, what's the December Fed meeting going to do? I mean, you're there. This is an exciting 3 weeks ahead of you right now. And I say 3 because that's what you have before you start thinking the Christmas that we're all going to go out and trading volume will fall off, blah, blah. Metals are on fire. This is the holiday for the metals. They are just on fire. As traders realize the dollar has made a major top, the likelihood of the Fed on the next move they make won't be up. It's likely down. I don't know when, but that's the likelihood. And that some headwinds are going bye-bye. So we watch all that. On the energy market, don't know what to make out of it because I don't know what OPEC's going to do. So I think you wait very patiently to see what they do. They'll tell us what they're going to do. But interest rates continue to fall, as you can see. So when we take a look at the mini S&P, the days or weeks of staying under the 18-week average ended a while ago, and you're challenging these old highs, all right? Remember, I told you could go up, 46.5 on a, if you flip a head and shoulder formation over from here to here. Well, we're not far from it, okay? The market is gradually working its way towards that, is my point. The trend is certainly to the upside. You don't want to see this low taken out. That would break the uptrend, but not the momentum of the market. We'll talk about that in a second. You just had a bullish crossover where the 18-day average in red got over the 100, and now this is a classic bullish setup. You have the shortest term average, the 18-day over the 100 in green, and the 200-day back here is underneath everything. That's pretty powerful action, all right? And that is why the market's going up for those highs. You get the crossover traders involved in markets like this. A potential target, and I'd be satisfied galore if you can get up there at 46, 42 plus. That would be the upper Bollinger Band. And it all is predicated on not losing the embedded reading with the red line turning down and closing under 79. If that happens, I think you have to throw out your bullish ideas and go into consolidation type trading mentality to grab hold of these gains and understand the market needs to rebuild with that. In the NASDAQ, it's the same. The embedded reading to me will define what this market does. It's ruling the day, in my opinion. And until the red line closes under 79, the pullbacks are going to get bought with a potential target of the upper Bollinger Band. There's other targets. There's a window envelope, and I don't show you window envelopes on this chart. I show those in the morning subscriber chart that you can get, by the way. So before we get here, I want to remind you, we are in the thralls now of ending our cyber week. So you just have basically hours left to it. And you could get any of my courses for free with any new one-year subscription or an upgrade to current subscriptions if you're a current subscriber. We changed and made this very easy for you on these final days. You can go to our website at iraepstein.com under the word research, buy one. We know that you bought it during this. We'll make sure you get what you want, and you'll be contacted and told how you can choose your courses and so on. The other thing you can do is you can upgrade a subscription if you're a current subscriber, but you can't do and say, well, I've got a spider. I'm going to cancel that and I'm going to get the futures. Won't work. All right. Can't be similar. You could add to the spider the futures and become the combo. So you got to go up in price. Got it? And then I'll honor all this. My new course should be ready before Christmas. That's my target. Will it be? I don't know. I think it will. We're still at November 28th, and I'm really making headway every day. I'm recording a couple of chapters, and I'll knock them off in fast order, I hope. If not, it'll be January. It's right around the corner. So there's a link in this video. You can move it right here, and you will see that. That'll take you to the area. Go to iraepstein.com under research. You can do it that way, or you can call my staff in the morning. They'll work with you. Okay, so let's go and take a look at what we've got. So as we're looking at the Dow, this is the latecomer. This and the NASDAQ had been up, but the seasonality is the latecomers. October 26th was the day that I kept telling you, according to the service I use for seasonality, was the buy day in the S&P. And I said it here, I said it in all my subscribers, and it has been a runaway. Imagine if you did that, just to give you an idea, that was right here. They don't all work that way. I wish I could tell you seasonals all work that way. Come on, if they did, would we be here? Get serious, doesn't work like that. Let's come back here. But you do have the seasonals up in the NASDAQ now and in the Dow. They peel off in sequence. So be careful. I talk about that in the subscriber video, not here. I won't give away the kitchen sink. Suffice to say, you're still up. Don't lose the embedded reading. Target still 35,875. The Russell has not been a buy. And again, I'm watching CNBC, and there's those little gremlins going, oh, this is the breakout. You got to own it. Folks, you don't buy the weakest in a bull market. You buy the strongest. This is not a bull market chart. Doesn't mean it can't catch up and catch fire. It also means the likelihood isn't great that it does it. In the 10-year note, well, look at this. Isn't this beautiful? What a Christmas gift. Interest rates are falling. And it affects everything. And they keep coming down tenths, but they're falling. And this is very important. And you can see it's in the 5-year. Notice I moved to the March contracts, no longer the Indices, by the way. In the dollar, look at how this is falling. Now, you still have bargains in Europe and so on if you're going on a vacation, but not the bargain you had going back to the summer when you were at 114 in the dollar index, and now you're sitting here at 102.60. Very big difference in the prices. And in the euro, you're no longer in the cheap territory. You were down in October. That's not far ago, right? At 104.5 roughly. And here you are over 110. So once the market crossed the 18-day average, it put together the rally. And it came alive right here. Once it embedded, that is where the life came into this market, and it just kept going. British pound, the same thing. Once it embedded, it's like the afterburner kicked in. Away you go. So if you haven't learned enhanced Bollinger Bands, I'm making it available for free. By the way, the value of the courses, any of them, with my charting software, and I give you some free access to my other research while you're taking your course. It's worth the price. Right there, I'm giving you basically the course for free. All right, the one exception would be you get a great deal on the full course if you don't buy the full subscription. You're getting almost 3 times the value, because I sell that one for the course alone, $600, and I may go up on it when I finish the new course. I'm thinking of going to $750. But higher lows, higher highs, you can see. Why shouldn't I stream just the way Disney streams? You're watching what they're doing with their prices? I keep wondering in these different markets, at what point will us that buy the streaming finally say enough is enough? I've already done it. I cut one of them out, and it's not like I need the extra $4. But I did cut one of them out, and I just said, you know something? I'm not going to do it. No, I think it was, I don't know, $9.99 or something. But I just said, it's too much. Enough with it. For the one time my wife looks at it during the month, I don't have the time to do it anyways. Higher lows, higher highs, overbought. What's going to make Bitcoin go is when they make the ETF legal. They haven't done it yet. You got to wait on that. Brent versus WTI. Well, it's going to be time for us to get away from the January very shortly, so be ready for that. Here we are, and we are not open yet, so this is where you finished in this market. Remember, it's Brent, so it opens at different hours. Our oil is right here, and in the resistance of the 200-day average, the 18-day average. The market's got support at the Bollinger Band, resistance up here. It's a mess of a chart because you're not trading the chart now. You're trading what is OPEC going to do or not do, and you have no idea. I mean, if you do, buy your puts, calls, you know what's going to happen. I don't know what's going to happen. In the heating oil market, you just made a higher high, lower low, no play there. And nat gas, I just wanted to say goodbye to December with you. It is now time to say, so long. We're not going to be following you anymore. We're moving on now into the next month. I think it's the F contract. So I'm Ira. Take advantage of the Cyber Week. I will catch up with you all come tomorrow morning. You take care.